Do you think that the European Union is unfairly targeting U.S.-based multinationals in this crusade?
You know, David, this is an issue that we've engaged on for some time now. We have a shared commitment with our colleagues in the EU to close down pathways to tax evasion and tax avoidance. We made real progress in the G20, more progress in the last 24 months than in the last 24 years on dealing with base erosion and profit shifting and dealing with some of the issues like transfer pricing that are at the core of the problem. Our concern with the European Commission action is that it is using a state aid theory to make tax law. It is doing it in a way that is retroactive and that overrides national tax law authority, in our view. And we think that it undermines the environment in Europe for international business because it creates uncertainty that ultimately will not be good for the European economy. As the head of the U.S. tax agency, I've been concerned that it reflects an attempt to reach into the U.S. tax base to tax income that ought to be taxed in the United States. And I understand the frustration that tax reform in the United States has been slow to accomplish. We've been working very hard for the last 4 years to press forward on this, and I actually believe we've made progress and that there's a growing bipartisan consensus on how to deal with tax reform in a way that will enable us to reach overseas income. What I don't think is right is for these issues to be addressed in a way that undermines the spirit of economic cooperation and that is inconsistent with well-established principles of tax law. It's not a difference that we want to get at income that has gone without taxation because of loopholes in the tax laws.
But do you think that they're targeting only U.S. companies? Is there some other agenda here?
Look, I have raised the issue that the pattern of the actions certainly appears to be highly focused on U.S. firms. They point to some smaller actions against non-U.S. firms. But the largest actions do appear to be aimed squarely at our tax base.
All right, now let's talk about Apple. So sometimes what's legal is more outrageous than what's not legal. So if, from what the European Commission has said, Apple found a way to basically pay almost no taxes, less than 1%, on this income it was setting to a head office in Ireland that didn't have an office or any people. You're correct that if they ever brought that money home, they'd be taxed in the U.S. They show no interest in doing that. Is it Carl Levin, the former senator, said yesterday, shame on Apple for dodging taxes and shame on the IRS for failing to crack down on them. Is there something to that argument?
You know, David, I share the view that our tax laws should make it impossible for income to go taxless, and that's one of the reasons why the tax reform proposal that we have put forward would make it impossible to park income overseas to avoid U.S. taxation. We would have a minimum tax rate that applies to all income that's taxable in the United States wherever it's earned. Congress has not acted on that. I believe that we have made progress. There is an increasing bipartisan consensus about an approach, and I'm hopeful that we will see action, probably not in my tenure, but early in the next administration. I have said to many CEOs, and I won't comment on any specific tax matter for any individual company, but I've said to many CEOs that you need to be more careful when you think about only maximizing tax advantage, because there is a real impact on reputation and the environment for business when you have issues like companies that avoid taxation. And I think that there is a need to balance what decisions are made at a firm level. I've been very clear on issues like inversion, that it's legal, but it's wrong. Mm-hmm. And a company doesn't have to take an action just because it's permitted. And if it would hurt a company in the long term in terms of its reputation and its market access and attractiveness, that's something that matters to shareholders as well as the quarterly impact of a specific tax decision. I think that we have a responsibility as policymakers to take action in these areas. It's one of the reasons that I'm so committed to continuing to work through the issues regarding inversions. The right way to deal with that, as with stateless income, is the process of tax reform. We have tools that we can use administratively, and we're going to use them as best we can.